Money miners, mate. Bloody, geez, didn't Romano go off yesterday? The money miners loved Romano.
It's a cracking chat.
Top 1 out of 10 for bloody.
Was it?
First 24-hour views, leading the pack of recent 10 episodes.
Deservedly so.
Go Romano, mate. But today, possibly another. This could be the next first out of 10. Because how good, like, when we're talking about BHP.
1% better every day, mate.
The punters come flying. Half-year results today, mate. 29 metals. Interesting trading yesterday. Mate, Sayona's Moblan DFS. The lithos are getting a bit of action.
They are.
But, God, bring on the YouTube comments about Sayona for us. I'll love them.
Get in the comments below.
If you're a cult follower. PolyMetals selling Russian assets. That's a bloody interesting one. Coronado half-year results, Osino bid, and Cyprium MD leaves. But they hit some copper today. Interesting.
Interesting timing.
Can't wait till we get to the stage where that can be the show. Brilliant stuff. Right, I've come across a meme, boys.
Tell me, mate.
The good old Facebook meme.
Did you come across it?
Of course I did, mate.
Did you
These things just fall in my lap, Trav. Like,
this wasn't you asking me how do I find a speech bubble on Can for earlier.
good old Canberra. Well, check this out. So I've just had this sent in. This was like a live interaction from an underground mine. We can see a couple of DSI guys going up to this chap underground, questioning, excuse me, why aren't you using DSI? And this fella responds, I'm very sorry, I'm going to take a hard look at myself. Now, pre-warning to any sites out there not using DSI as a ground support provider, they will just walk underground and question why. They have a habit of doing it. We've seen it here, and more just probably out of curiosity, mate, because they are the top tier of global ground support supply, but I think they sit in bed at night and wonder, why haven't we got 100% of it? Because I don't know. But, look, can't have it. There's probably consumer watchdog rules on this, but...
Monopolistic practices.
But DSI are going to be pushing the envelope with them, I reckon.
So, Matty, you're telling me this example, you could change hats a bit, and it's the managing director bringing the institutional investors on a site visit to their trip, and they're grilling the MD. Am I really going to put money into this company if you're not using DSI? That
is so much more appropriate than what we had to edit out that Trav put in before. That might be a secret for the Hootaroo chat, that one. But, mate, I think that is exactly right, JD. And, mate, if anything is going to get close to a global monopoly, just by the way this is running, I think it's going to be DSI because, mate, talk about a stranglehold on the global ground support industry, and that's because...
the product's that bloody good.
They're the best. Simple as that. And, mate, as we said last week, the Qdale factory in Perth is expanding on the back of this advertisement they've been doing with us. So, look, mate, absolute bang for buck because they are going to be pumping out double the splitties, double the plates, a shitload more mesh and whatever else you want to support your ground to make it safe for the workers. Like, mate, what DSI have done for underground mining, second to none. Mate.
Well said.
Thank you, DSI, keeping the industry alive. Mate, here's another one. While we're on underground, I want to take you on an underground journey. I'm going to go back to me heyday, back in the day. It's like, buddy, when you're like, back when I was investment banking, I'm like, back when I was on the jumbo. So here's what happens on a mine site. Boy, I just have experienced it. Mate, you go to brekkie at 4:30 a.m.
Yep.
You hook in a heap of bacon and eggs into you. Mate, you can even have a bit of last night's leftover curry if you want. Like, mate, she's just on a platter there. But once you're underground, you're in for the long haul. Mate, you can't be nicking off to the surface all the time for running errands, you'd say. That's what we call a dog fucker in underground mining. If you're fucking the dog, it means you're doing nothing. Mate, and you get found out quick and you'll either be back on the truck or politely told there is no future for you here. So for the majority of underground miners out there that I guess they put their heart and soul into that underground every single day. But unexpected urges can pop up. That curry you had for breakfast might not be sitting too well.
Ooh. Why didn't go for
And when you got to go,
I think I know where this is
you got to
going.
go.
What do you do then, Matty?
Rather than getting rid of these urges in, I guess, irresponsible and unhygienic fashion underground, there is a solution. And KCA have just brought it to the table. They have bought and now on hire 4 underground shitters to hire out to a client. Check them out. 4 single shitters. They were asked by a client, how do we increase our productivity during these, low commodity prices that we're experiencing? KCA, being that company, said, how about we buy a heap of shitters and then we give the workers no reason to leave underground? Your productivity will go through the roof. And that's what they did. 4 single shitters now in the KCA fleet. And, mate, if clients want them, if you want a double, lady-male segregation, I've got a picture here, mate, they'll buy them for you as well. Mate, if you want a shitter, get a hold of KCA. And, mate, this is just another example of their no is not an answer attitude. So between the ITs, the Normets, the flatbeds, wearing out talking about because there's so much. Trucks, light vehicles, graders, buses, excavators, and now shitters. Is there anything KCA can't do? I'll tell you what. And as I've said before, if uranium takes off, that will be the company first up trying to service the industry. I can guarantee it.
Every time you say the word shit, I have Pascal's words in my head. From the helicopter to the shittery.
Oh, geez. Are we allowed to have KCA and Brooks both as sponsors now because they both hire shitters out?
Well, one's gone underground, the other one's not.
Yeah, I suppose Brooks are surface shitters.
Yeah. And for the farm.
And the farm. Geez, nearly a conflict there. Oh, mate, get a hold of KCA. Bloody absolutely. They'll do anything for underground mining and they'll do anything for anything, I reckon, because that is what they do.
Cool, KCA.
Love your bloody work.
Speaking of shitters, Nickel West.
Oh, a company that's
what a segue.
an industry that's in the toilet. Jeez, and you know the worst thing, the worst thing about this whole nickel thing, and something that we probably overlook a bit, and we get in the fucking bloody in the zone. Just the article the other day about the Kambalda pub,
I read that one
because Kambalda's just went through such a period of shitness, and this was going to be a bit of a resurgence, and it started happening again, and within not much of a period, that town is again under a lot of stress. So, mate, any of the Kambalda folk out there, bloody hearts going out to you. It's really thinking of you, but it's the world of nickel. So, yeah, mate. BHP, who aren't in, they got the concentrator in Kambalda. Let's talk about what they'll do with that after this.
The smelter.
No, but the concentrator's in Kambalda.
Yeah, it is.
Yeah. So that'll be one. Wonder if a junior might want to pick that up.
Oh yeah, there's some interesting articles about that. We'll get to that.
Let's go.
So, mate, BHP released their half-year announcement today, and the contents of the result was, largely in line with market expectations, but that might be because BHP's media machine was in full force pre-guide of what to expect with Nickel West and the woes around that. And it was definitely Nickel West that was the most, I was most interested in hearing about in the call and the results today. And it's fair to say the majority of the questions were about this business too. So I want to read a direct quote in the results today about the future of Nickel West. I've highlighted it here. It says, "We are also looking at the longer-term future of West Australian nickel, including potentially entering a period of care and maintenance at Nickel West and assessing phasing and capital spend for the development of the West Musgrave project." And then there's this specific commentary from Mike Henry himself too, as reported in the West Australian today. Mr. Henry did not put an exact timeframe on when BHP could put its nickel operations on care and maintenance if adequate government support does not eventuate. BHP's smelter and refinery operations means the company has a much more complex decision in shelving its nickel assets compared to peers, Mr. Henry said, flagging a decision would be made in the months ahead.
It's interesting to note a lot of the articles have different sort of tones, and there was a snippet that stood out to me. I think it was in the Fin that said the nickel business makes up, I think, 2.7% of part of the revenue for BHP, but over 90% of the questions on the call were nickel related.
Interesting. Yeah, all of it else is just it's iron ore, you're making shitloads.
70% EBITDA margins here.
Yeah, I think that the various tones in different articles today, JD, might be in relation to how close the reporters are to BHP's media team and IR team. But, the one chart that really stuck out to me is they always show this chart. It's return on capital employed by asset. And it's like if you've ever looked at BHP's reporting, you'll recognise this chart. They they do it up every single time. But this time it looks really different to when I've seen it in the past. Of course, West Australian iron ore is the standout, and you can see obviously on the x-axis there is the average capital employed, but then you've got the return on that capital for that half. So West Australian iron ore, 62% is the return on the capital employed there, which is what you expect with iron ore. It's like you expand a tiny little bit, but you make so much money on that because your margin's so freaking high. And then at the bottom there, you've got Western Australian nickel, which looks like negative 31% there, which is just crazy because you don't want to be bloody, getting a negative return on the capital you're putting into the ground. So,
but you can also see from that chart on the x-axis is that it is relatively little amount of capital that went into that investment versus the iron ore investment that had multiples of billions of dollars sunk into it.
So I think we're looking at this, they can afford to just keep it open and lose money. Because they make that much bloody money out of iron ore.
Tell that to Mike Henry.
Do it yourself, Mike. Be the government.
Let's just contextualise what has happened today with the rapid evolution of potential government support. I mean, for the entire last month, we've seen so much media and politicians speak on needing to support the nickel industry, and that has manifested in three pretty substantial policy decisions or proposals. First came proposed royalty relief from the West Australian government. Second, nickel was hurried onto the critical minerals list. Did you catch that a few days ago?
Yes,
by Madeline King, which would allow the industry to access some of the Aussie $4 billion of federal government funding available.
Too late.
And then third one is there's a lot of conversation about a potential production tax credit, which translates to subsidising OPEX, which has various advocates, but is unclear if it will get through just yet.
And the thing about this, which is unfortunate, the reason why there's all this stuff about needing to support the nickel industry, that's because it got restarted.
What got restarted?
The nickel industry.
Yeah, I mean, we've gotten sort of full cycle, right, when BHP wanted to sell the thing just a couple of years ago.
Yeah.
And nickel
then
is
everyone followed and it all got restarted. And then with like that, it's done.
Now, in the call today, BHP were pretty keen to distance themselves from being the instigators of the policy suggestions and reforms that are out there and have happened. There are a few quotes. This is from the AFR today, JD, and I've highlighted the section that says, BHP understands why there is a push for temporary support for the sector via the federal government's proposed tax credit system, but this was not BHP's idea. And the credits might not be enough to save nickel operations that have already been shuttered. So BHP probably realises that it's a bad look if the public sees them to be putting their hand out for government money while they're selling iron ore for $130 a tonne and the Aussie dollar sits at 65 cents. But I don't buy that BHP is simply riding the wave of someone else's lobbying efforts here. From the day we put up our show, the one that had nickel bailout inside the crystal ball, I think it was our second show of the year or thereabouts. But ever since, we could tell what was happening just by the media machine on the front page of the West and all of the hurried urgency to have this, political roundtable. And I don't buy that BHP has been an innocent bystander while someone else has been lobbying as hard as possible. I mean, sure, the production credit, the production tax credit specifically might have been Wailu's idea, but look at the discussion on where BHP is at with Nickel West. They're yet to make a decision about care and maintenance yet. They say it's going to happen in the coming months, but Mike Henry wouldn't even put a timeline around it. To me, that suggests the equation around care and maintenance hinges largely on just how much of a prop-up they can get from the government to make the numbers work. And I interpret that as putting more pressure on the government for more support.
I think you're right, mate. I think any massive future investment personally is off the cards. And it definitely hinges on what sort of support comes. But the real big issue here is the rehabilitation costs with shutting everything off. If they could just sort of turn it off and pay a piecemeal amount every month or every year, I think they'd be okay with that. But they don't want to, we spoke about the US $600 million difference that was sort of equated to the rehabilitation cost, but we don't know what sort of time period that was discounted from, and you'd assume that was significantly in the future. They don't want to do anything to realize that cost and have to pay a significant amount in the near term. So they want to come to an agreement. And we chatted about it before. Maybe it's like a campaign type of processing or something, so they don't have to realize a massive cost right now. I think they'd much rather just have a smaller amount on a regular basis and just sort of cop that as a operating sort of cost that they have to stump up.
We just don't know how long this is going to last. This one bifurcation, depending on this bifurcated pricing, Indonesia could just keep bloody producing shitloads of bloody nickel, and even with bifurcated pricing, it might even not be competitive. Like it's,
totally.
Yeah.
And I mean, to the point of like more government like freebies or not. I mean, I think Nassim Taleb has the best writing when it comes to the horrible societal outcomes that occur when you privatise the gains, but you socialise the losses. I recommend both BHP and our class of politicians brush up on that literature.
It's similar to, I think we were talking this morning about the lepidolite for lithium in China. Nickel's going to, now that there's so much supply in Indonesia, do you think that it would get to a point where you can't see prices going like through the roof again? All that supply's there. Indonesia can just bloody they churn out so much more tons than like ridiculous amount more than a nickel sulfide operation can in Australia. It just, now that supply is there, is very different to when it wasn't there.
The two words I think come to mind are, cyclical and structural. And this seems to be much more of a structural change to the nickel market, where this is here to stay, as opposed to what we saw in lithium a few years ago when there was some royalty relief provided, and it seemed very much to be a cyclical impact when a new forming market, yo-yoing up and down. And I think those words have been echoed by a lot of people in the industry. Graham Kerr comes to mind, who had worked for a long time as CFO at BHP, now runs South32. He's got nickel in his portfolio as well, not in Australia though, but saying this is a structural change to the market. Hence, government support might be a bit short-sighted, and you might not see any return on that capital.
What can save it, to your point, though, Matty, what can make the economics all work for the West Australian nickel business is if prices bifurcate. Can you get a green premium? And
can you get $9.50 a pound?
And the hard reality about that is that the entire industry needs to find product market fit in a highly, highly capital intensive industry. Like there is no known bloody buyer for that product in the long run yet. And you have no product market fit, but it's like a hyper capital intensive industry.
Yeah, I think and we're trying to get inflation under control, and bifurcated pricing means that all just gets passed down to consumers eventually, which is inflation.
Yeah. On the theme of capital intensity, we can talk about other things that sort of stood out from the half year results. And one was the CapEx spend. Seems to be a real step change from the sort of US $7.5 billion in each of the years leading up to now for a number of years, jumping to over 10 billion. So that's over a 30% jump, and to be sustained going forward.
This is for the group, right?
This is for the group, and a substantial chunk of that is to come from what BHP calls future-facing commodities. Big projects are Jansen in Canada and South Australia Copper, $4.2 billion US in this financial year alone is going toward copper. So that's a huge amount. And on SA Copper specifically, obviously that's bringing in the Oz Minerals assets. They really highlighted the uranium potential there too, which just shows you how much times have changed. People were protesting back in the day about the uranium coming out of here, and now they're putting on their presentations that they're looking to increase that. That's just a different world from what it used to be. And another number on this was 500,000 tonnes per annum of copper, which is a much bigger number than anyone had tipped coming out of that Olympic Dam and associated assets. So,
isn't the word future-facing metals an interesting one right now? When that term was first created, we weren't really talking about uranium. No talk of future-facing metals may not be future-facing metals. Who knows?
They actually use the word future-facing commodities because
Commodities.
potash isn't a metal.
Oh yeah, well technically neither's lithium. So it's just as I say, you don't know it's a bubble because that's why you don't know you're in a bubble. That's why they call it a bubble.
Yeah, we'll see which are the.
That was on The Big Short.
And just circling back to Nickel West briefly, we read in the AFR that there are likely some implications for Lynas as well. If that goes to care and maintenance, Lynas have an agreement to get supply of sulfuric acid from the smelter there to go towards the processing at the Kalgoorlie cracking and leaching facility. The alternative for them is they'd have to import that, I imagine, as opposed to get it directly from the smelter, which would be high cost.
And there's been a bit of a global shortage in sulfuric acid lately, so they can queue up alongside Kazatomprom.
Oh, mate, this could be a bloody another catalyst for the U-Bulls. BHP, sulfuric acid issue. Oh, mate, don't get me started.
Alrighty, should we chat about 29 metals?
Mate, what? Isn't this interesting? So this has been hemorrhaging of the last, well, it's been hemorrhaging for a while now, but really hemorrhaged the last, few weeks. It's down to 19 cents on Friday. So I think, what did I say today? EV of about 250 mil that's with include Golden Grove and Capricorn Copper and just losing money, 29 metals, even at lost shitloads on Capricorn Copper, but losing money at Golden Grove. But yesterday it just was up 45%.
On no news.
On no news.
Except the chairman's letter.
That's not right. The chairman
that was
reassured
aftermarket
shareholders.
She's all good.
A non-market sensitive letter, with no news.
We've also had the in the last month, to put it all into context, we've spoken about the changes in Substantial. We saw Ausbil selling out their stake, Aussie Super coming in, upping their stake to 14-ish% from memory, and then on the back of all this, you've naturally got a whole heap of rumours swirling around what's sort of leading to the change in the pretty rapid change in share price that we're seeing.
Let's have a chat about it. No, we don't know what the party doing it. Could have been multiple parties, but it looks like that the price yesterday was a lot of volume, a lot of lift, and it word on the decline. It could be someone positioning themselves for a future entitlement offer or something like that.
That makes no sense. Like, I don't see how you win from that trade by ramping a stock in preparation for a raise. It goes the other way.
Well, usually they're short the shit out of it. And
exactly.
But as remember last time they had the entitlement offer, the shorters had to cover extra for the entitlement offer, so there was a bit of a short squeeze after the raise on the last entitlement offer
because it was an entitlement offer. The people who had sold short couldn't buy in because they weren't holders of the stock.
And I think we said that it's nearly going to have to be an entitlement offer if they do, because everyone wants to know, right, are EMR taking up their pro rata in the offer?
I'm not sure it necessarily has to be. They could still just do a institutional placement and have EMR advertise that they are tipping in a substantial amount. I would suspect Aussie Super would tip in as well, given their recent buying. But, a lot of the reason that the stock was getting smashed was the nature of the assets and the lack of cash flow that they're going to produce in the immediate future, and putting that side by side with the debt profile, right? So that's the reason, and that wouldn't really apply to something you sort of said earlier, Matty. Maybe somebody's taken the view that the assets have a bit of value. Maybe that's not in 29 metals, but we'll sort of see that would drum up a bit of interest, given that in a bullish copper environment, these assets still could be worth something.
I think for the idea that someone is ramping the stock to then get participation in the entitlement offer, considering they would have bought a lot at 19, 20, 21, then if they then participate and then possibly underwrite the entitlement offer, then they get, even more shares on top of it at the discounted, like it'd be probably a heavily discounted entitlement offer, and then they start rinsing them after that. Don't know if there's a bit of a 10-20% profit on that.
It could also,
there's smart traders out there.
I can't figure out how you do that one risk free. It feels like you're still exposed to market price and volume, and does the price hold up over time? Yeah.
A bit of the buying could also have been short covering. The stock still had a few percent sold short, and we'll find out in a few days whether that's reduced.
Short covering, or someone knows something that the rest of the market doesn't, or those are the things that.
Yeah, I mean, I'm not sure you would need to execute in that manner and cover your short and just do it so, leading to a 45% spike in the price. I don't think that's the way you'd go about it, but, weirder things have happened. Should we chat about Sayona's Moblan DFS?
Oh, mate.
So this one's a 60-40 JV, 60% being the Sayona interest. Matty, you jumped into the stock and had a look around what the price movement was.
I love a good price movement.
And a
You got to know
candlestick
what
chart.
the trading's doing. A couple of candlesticks. It actually opened up, I think, 12%, but ended down 7%. So
And it had
good at the start, bad at the end.
And it had an eventful week. Like a lot of the lithium players out there, they would seem to be catching a bit of a bid over the last week or so, and they'd come from the high 3-cent sort of range in a very short amount of time to 6 cents, which is a 50% jump.
Oh, mate, we had the YouTube comments ripping into us saying, here we go, boys, Sayona, get this up yous. It's going good on YouTube. So here's quick metrics on it. 21-year mine life, 2.3 strip ratio. It's 1.75 million tonne mill, 1.36% lith for 300,000 tonnes of spod. 6% spod. We'll get into that. But what stood out, boys, 1 billion capex.
Yeah, let's
Aussie.
start with the capex, because that is one of the first numbers that really stood out to me. This was substantially above expectations. So
I think Canaccord had it at 425 US and it come in at 722 US. So that's 70% higher than predicted.
Yeah, so very, very chunky. And also that might be explained away by having a bigger mill or whatever.
They've got DMS and float and ore sorting, and they've got to design it to be winter proof.
Yeah.
So it's not like building one up in bloody 40-degree Pilbara, WA.
Yeah.
She's minus 40.
That said, the capital intensity of the build is still substantially above average. So getting into how they might actually fund this, given the nature and the size of the business, they did talk about potential off-takers and project partners, which, if they do fund this.
No, you don't have to worry about funding it if you can't get permitting.
Oh, wow. We're going to get into that. So let's talk about the lithium prices firstly that they use. So in the sensitivity analysis, they talked about US roughly 1,900 to US 3,400. Now, the whole point in a sensitivity analysis is to see how a project stacks up under stress. So having the lower bound be double what the price is currently doesn't really give you the ability to see how that might hold up. So that kind of annoyed me a little bit, but I should preface it with saying that the pit shell optimization was at US $1,050. So the other prices we're talking about there is what they're selling the lithium at.
Well, we'll bring a tweet from Respeculator on the new Chalice Award nominee for using a 1990 SC6 price versus current spot of 800. I'll go off the one on our the one number I got this morning was $850 a tonne. From memory, I think Chalice's was the palladium price was 92% above spot. Based on US 850 a tonne, this price is 134% higher. So we've got a new record.
We got a winner.
We've got a new winner. Chalice back to the silver medal there.
You've measured versus spot there. I reckon the better one is measuring it versus long-term consensus, given it's undeveloped, but probably similar numbers.
And all-in sustaining cost was an interesting one. So let's look at Kathleen Valley's DFS, what they put out. So they put out an all-in sustaining cost of US 452, but in the footnotes, all-in sustaining costs is cash operating costs, including all mining, processing, transport, freight to port, port costs, site administration, overheads, royalties, sustaining capital, yada, yada, yada. Moblan, all-in sustaining costs $561 US a tonne. But look at the footnote down the bottom, number 15. All-in sustaining cost doesn't include transportation costs, which transportation costs are actually another $110 US a tonne. So there's a sneaky one there. Permitting, Trav.
Permitting. I'll touch on this one, Ricardinho, to your point on permitting. Mondi had a tweet on this of a sign that sits out the front of the project saying, essentially indicating that there's not an enormous amount of local buy-in for the project. Now, this is
Not an enormous amount or none at all based on that tweet.
well, it's one science. You don't know what the community actually thinks, but this has been an aspect of getting a project developed in Canada that cannot be underweighted. It is very harder than Australia to get a project permitted and through to the build stage in Canada. So I would have thought it deserved a bit more commentary in a definitive feasibility study, but I'm sure the company will be working on engaging with the local community there to see what they can do to get the local buy-in.
I think it does depend by province in Canada. It's not
absolutely.
It does vary, but Moblan's been notoriously challenging given some protests, etc.
Recoveries, 75% they're predicting. That's bloody good. Hard number to replicate, considering I don't know who's been getting 75% cover in lift. Not many. Pilgangoora got 66% last quarter. They're DMS and float as well. They are putting an ore sorter in for the primary crusher, so you never know. That's pretty high. 6% SPODCon as well. Pretty sure only Greenbushes produces 6% SPOD. Here's the latest operational con grades that I've found. Sigma Lithium 5.7, Pilgangoora 5.2, Wodgina 5.8, Bald Hill 5.4, Mount Marion 4.2. That's up from 3.7. I don't think 6% is an easy thing to achieve.
No, not at all. Discount rate was the last thing that stood out. These guys used an 8% figure. Yeah, I mean, they have historically done a lot of very dilutive capital raisings. So, and I'm not sure 8% really captures the risk involved here, but these things are essentially used as a benchmark, and they're not going to go out on a limb and do a 10 or 12% and make their project look substantially worse. So I'm not surprised that they've gone with the 8% number there.
Anyway, we'll wait to see for funding.
That's
funding,
it.
lithium price, everything.
All right, let's go
Love
to
you, Sayona shareholders.
Let's go to Russia. There was some fascinating news out of PolyMetals.
PolyMetals is an ASX company, but PolyMetal is the Russian.
PolyMet, I think they call this one, don't they? Like as a short, the slang.
PolyMet.
PolyMet.
They were a top 10 by output gold miner. Russia domiciled, but they've sold their...
not Russian domiciled. They're Kazakh domiciled now, mate.
But they were Russian domiciled,
They were Jersey domiciled at the corporate level, but they had dominant portfolio of Russian production assets. But I'll tell you that in the piece, mate.
All righty. Let's rip in. What have they done regarding...
So they're selling the Russian operations in a US $3.7 billion deal. That deal is valued at about, at that much, but after tax, PolyMetal is expected to receive only $300 million in cash because there's a bunch of third-party debt, intra-group arrangements, settlement of debt, and when all of that
shitload of it by the looks.
When all that goes away, it's 300 million cash in the door. So following the invasion of Ukraine 2 years ago, PolyMetals switched its domicile from Jersey to Kazakhstan to unblock international payments, including dividends from Russia, because Jersey was not allowed to do business with Russia. So, I mean, Jersey itself is just a bloody tax haven country.
Yeah, so that they are a London-listed company.
Yep. Following, and then after the US sanctioned the St. Petersburg-based unit in May 2023, PolyMetal began looking for a buyer for the assets, which accounted for 70% of its revenue last year, those being the Russian assets. It'll be left with an annual output of about 500,000 ounces per year, down from 1.7 million ounces. And interestingly, PolyMetal will continue to use the Amursk POX processing facility in Russia to process gold concentrate until they build their own plant in Kazakhstan. And the transaction is going to leave them with their Kazakhstani assets only. So that's being 2 producing mines and 1 development project. I find it really, really interesting for a ton of reasons. And when you look at the wording of the rationale in their press release, I've highlighted one of the points here, and that is they had the restricted ability to pursue corporate actions for the benefit of shareholders, meaning, when they had these Russian assets, it just made M&A very difficult. So, look, it's pretty left field and extremely unlikely, in my opinion, but...
Don't let that get you down, Trav. Throw those darts, Cobber.
How wild would it be to see PolyMetal take an interest in say, De Grey, right? Polymetal, they're the pox specialists. De Grey needs
that's
pox.
a good one.
I mean, it's unlikely for a bunch of reasons, not the least of which is simple competition for capital. But
It's a pretty
interesting
good
hypothetical.
it's a pretty good prediction, mate. It's not as good as mine, but it's pretty good. What do you think of the deal?
Yeah, I can completely understand why you would want to annex your Russian operations from the rest. I think you're going to bloody pay a pretty steep price for doing that because, it's just the reality of doing business in Russia. But it does make sense to me.
Very
What
good.
they emerge as, hereafter, we'll see.
Yeah, and
If that comes true before any of mine do, I'm going to be so fucking pissed off.
given the major shareholder is a Russian oligarch, I would have think there's things that sort of didn't go too well the last couple of years between the leadership of Russia and the owner of this company, leading to what's happened. But I'm also thinking that might be a hindrance for any significant investment in Australia.
Right, boys, educate me on the OG energy coal. What's going on with Coronado?
Well, we are not talking about energy coal here.
Hang
We're
on, mate.
talking about...
OG Energy, it's actually whale oil.
Is that
Wow.
right?
Well, I mean, you could go wood before that.
And before that, mate,
Just
fruit.
good, just genuine labour.
Yeah.
Just blood, sweat and tears.
That's it.
Right, Coronado, what's going on? Met coal, I gather.
Met coal. So, I mean, we'll get into that, Matty, because that is one of the reasons Coronado is favoured in the space, because they're 100% met coal focused business. So 2/3 of their production comes out of Oz and 1/3 out of US. They produce just under 16 million tons of saleable coal. Net income of US 156 million. This got whacked 80%. And I mean, my first question was, given where met coal prices are, how are these guys only making that much? So their realised price was $215 a tonne. Now that's a 73% realisation of the index, and that sort of indicates the quality that they produce. Their operating costs jumped over 10% year on year to $156 a tonne. But they also spent almost $230 million, and that sort of indicates the nature of their projects. They need a lot of capital investment to keep them producing. So they end the year at just under $100 million net cash. So ultimately, I think they're not the best assets. It's indicated by the amount of cash that needs to go in, and just goes to show that they're geologically challenged, as we touched on when we last spoke about the company. And the company is also eager to point the finger at as many different things as they possibly can, namely the high inflation that they experience leading to higher costs.
Are they most of them about the low quality? Is that inferences, or is it disclosed? Do they talk about it, or they're, as you said, pointing the finger elsewhere?
You can see it in the detail. That,
Yeah.
Like I think
The yield that they get.
Yeah, their cash cow has really declining yield over the coming years before it sort of picks back up again. I think maybe after 5 or 6 years' time, and so they have to invest a crap load of capex just to maintain production in that phase.
And they're looking to scale up production. On the ownership side, we spoke about 6 months ago a substantial change in ownership. EMG Group trying to sell their 51% interest to Seven Global, good friends of Travis Ricardino's here. Seven Global being the investment fund of a wealthy Czech billionaire. On the trading multiples, these guys trade at a 12-month trailing EV to EBITDA of over 6 times. Obviously, trailing's not the best metric to use, but it just gives you an indication of how they're kind of trading. Like I said, Matty, that's way richer than a lot of the peers that they sort of comp to.
I think that's because some people look at Coronado and think, oh, it's pure met play. I don't get any of the dirty thermal. And they also look at it and think, assets in US. Oh, geez, it's a chuck a premium on that. But yeah, the reality is cash flow has been really, really hampered relative to what you see elsewhere.
Exactly. I think you're spot on there. The company is trying to grow production, trying to grow it by over 25% in the next couple years. So that might be another reason why people are attracted to the stock. In terms of guidance, they guided for a capex increase. This goes to show exactly what we're talking about. Another 235 million needs to go into the ground, and they're going to experience a 1 million tonne per annum increase in production. But getting to a point that we've spoken about a heap, Matty, economies of scale really matters in mining, and these guys are reflecting a 10% drop in operating costs, because the production is going up. So these things really matter in mining, and you can see it best looking back at last year's results. A 20% drop in revenue led to a 70% drop in EBITDA. So these guys are very, very leveraged to the price, and economies of scale really matter here. The last thing of note with Coronado, given their met coal focus, is that they're relying pretty heavily on growth out of India, and they put a lot of numbers in their chart, in lots of charts in their presentations about the growth that they're seeing in India. India has thermal coal, but it doesn't have met coal, and they sell 24% of their product to India. So it'd be interesting to see if that growth project plays out like them, and a few others hope it does.
Rise of India.
On that note, I read in the BHP report today that they were seeing 40% growth in their demand for iron ore out of India versus at the start of the decade. So that's 40% versus 2020.
Mate, think of the
That's substantial.
Mate, think of the steel they need if the IPL keeps going the way it's going. Stadiums everywhere. Mate, that's going to be the catalyst. It's cricket.
Yeah.
Oh, mate, Osino.
This is another quick one from overseas. Osino.
Never heard of them.
Yeah, well, you might have.
I will now.
They're a TSX-listed gold developer project in Namibia. You might recall that Dundee Precious Metals had, there was an agreement to acquire the company 17th of December last year. Well, today, mate, Osino come out saying they have a new bid for them, and the board has deemed this one to be a superior proposal already. But the catch is, it's to a foreign-based mining company. They don't even name who the buyer is apart from that one quotation there. They're going to pay Canadian dollars $1.90, and I just think what a pathetic announcement to put to shareholders. It's infuriating to read this shit. I see this and I think they literally have no regard for keeping the owners of the business properly informed. How is a shareholder supposed to agree with the board that this is a superior offer if the board doesn't even name the bloody bidder? What if it's a company that doesn't have financial capability? What if it's Matt Michael LLC? Fucking hell.
Mate, they'd vote yes on that. Mate, they'd buddy. So we can surmise it's probably Chinese or Russian.
What a joke.
Or Saudi Arabia.
You'd never get away with this shit on the ASX. You wouldn't. You'd have to name the company.
Last but not least, gentlemen, Cyprium. We spoke about them a while ago. They came out with a restart study at your old stomping ground, Matty, right?
No, I've never been to Nifty.
Oh, but you had some insight into it. And we are awaiting a revised restart study, but the managing director has left after 5 months in charge. They did a bit of a financing package. We spoke about what that, did to the capital structure there, and they need a lot more capital to fund this restart if it is to happen. So major red flag, the MD leaving after 5 months.
They actually announced today they hit some copper. They got a JV with Ramelius. So they've got 80% of the base metals rights. Ramelius have got 20. So they were actually up 16%, but then ended up back where they started. 15 metres at 3.26%. Go the exploration. Right, I love your bloody work, lads. Mate, thank you to you two, my business partners.
Thank you, Matty.
The actual podcast partners as a whole.
VRIFY, InvestorHub, DSI Underground, SMEC Power and Technology, McMahon Mining Title Services, Anytime Exploration Services, KCA Site Services, Brooks Airways, and K-Drill.
Have you got somewhere you need to be or something?
Hootaroo!
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.